Yet another month has passed, and that means that it's time to take a look at our dividend portfolio. So in this video, we're going to dive into my dividend portfolio for the month of January and look at all the buys, sells, and dividends received. And we'll look at how the portfolio performed versus the overall market. And then we'll discuss a little bit of my thoughts on the market right now and what I'm kind of trying to do over the next few months with the portfolio and in the coming year. We're making any updates, and we can see that the value of the portfolio is around $8,700 with projected dividend income of about $210. But we're going to go over to Fidelity and download all of our transaction data that's filtered out from January 1st to the 31st. So we're going to download that to my computer, and then we will go into the spreadsheet here and import that file. And then I have some scripts that I can run that will parse all of that data and put it into my spreadsheet in the appropriate spots. All right, so I got that data imported, so I'm just going to run the script, and we'll come back in a few minutes when the script is finished running. So the script has finished up, and we got the little summary pop up here. So we made deposits of $400 in January, total buys $225, and then total dividends received $25.03. So let's take a look at exactly what that was. So at the beginning of January, we did make a few purchases of some different companies of about $25 each, and these were basically companies, at least three of them here, Carrier Global, Caterpillar, and Lockheed Martin. These were essentially companies that I hadn't bought in more than a year. And I kind of have a rule in my portfolio where if I haven't bought a company in over a year, then I'm just going to buy a set amount more, just so I can continue adding to that position, even if maybe I don't think it's at the best price, but I want to own more of the company over the long term, so I'm going to keep buying it. So Carrier Global, that average price was $55, Caterpillar $285, which is pretty expensive, and Lockheed Martin $461, which is pretty expensive there as well. And then I did buy a share of Leggett & Platt because I just thought the price was fairly reasonable at around $25. And then later in the month, I bought some Apple and Microsoft for pretty much the same reason. Hadn't bought those in more than a year, and crazy, Microsoft seemed very expensive at $370, but it quickly went up, another, what is that, close to 10% to over 400, which I thought was pretty interesting. And then later on in the month, I bought a little bit more of Leggett & Platt, about $25 more, at around $23 per share. And then finally, I bought about $50 of 3M at around $95 a share. They fell down maybe 10 or 15% on their earnings announcement, and definitely below $95 I think is pretty attractive for 3M, even despite some of their problems. And then we can see the cash deposit here of $400. So those are the buys for the month. We'll go over and take a look at the dividends received. So starting out at the beginning of month with HP, $7.99 from HP. This is one that I bought fairly heavily in, I think, the September timeframe, when they were maybe around $27, $28 per share. I think that was a pretty good price, and I'm pretty happy with that. I think that might be the largest position in the portfolio still. So big dividend from them, $3.71 from Leggett & Platt, $1.46 from Cisco, and then $2.87 from JP Morgan, and then we got $9 of interest on our cash, so pretty substantial there. Unfortunately, we do have a fair bit of cash sitting around. I say that unfortunately because I'd love to get it invested, but I don't see a ton of great opportunities. But on the other hand, we are getting some interest from that cash, which is somewhat positive sign. On the monthly dividends chart, looks like another great month, up at $25, and looks like the last month that these companies paid us was around $18, so definitely a good increase from there. And just generally this chart looks nice. And then on the quarter, this is the first quarter of the new year, so $25 there, and same thing for the year, $25 so far in 2024. And then if we go back to look at some of these other sheets, if we want to look at ticker changes, this is basically going to tell us how each company performed in the month, and just tell us, which companies did well and which companies did poorly this month. So we have that filtered out from the 1st to the 31st of 2024, and we can sort that. So 3M was the worst performer this month, down about 14%. Leggett & Platt down 12%. Pfizer down about 9%. Lots of them down, 3, 4, 5% there. or just fractions of percents. And then the biggest winner this month was Travelers, up 10%, and Travelers was already up, probably at least 5 or 10% over the last few months before that. So Travelers really doing well. Microsoft up 7%, Procter & Gamble up 5%. So a few companies that did fairly well this month, but most of them were down just a little bit, I think. And then looking back at the summary sheet, we can see all the companies we own again. And let's sort this again by equity to see the updated ranking. So again, HP is still the largest position at about 9% of the portfolio, followed by Johnson & Johnson and Texas Instruments, and then Microsoft, JP Morgan, AbbVie, Apple. So definitely some fairly substantial positions. We have, 5 positions over 5% of the portfolio, and another 2 that are pretty close to 5%. But right now, total portfolio value is $9,153 with projected dividend income of $219. And then right now, our 5-year dividend CAGR average is 7.5%, which is a number that I am definitely trying to focus on and partially improve, but also partially just make sure I don't bring it down. So I think, in that 7 to 8% is pretty solid. And is sustainable for a lot of these companies, but I don't want to bring it down. Then if we look at by sector, we can see very largely in tech, so almost 30% of the portfolio is in tech right now, HP and Texas Instruments being big components, and then also Microsoft and Apple. And then actually, tech is about the same amount, 30% of dividend income, which is surprising. I think HP and Texas Instruments definitely have a little bit of a higher yield than a lot of the other tech companies I might own, like Apple or Microsoft. So not much too interesting to see there, aside from being very heavy in tech, and then also the fact that 23% of their portfolio is in cash right now. So we can look at that. What is that? $2,108. So like I was saying, I definitely want to get some of that deployed so that it's working for me more. But at this point, I just don't see a ton of great opportunities. Definitely hoping for some over the next few months. And maybe I'll find some new stocks to add to the portfolio as well. I'm not sure, but that's kind of what I'm trying to do, is just continue adding to the current positions I have for the most part, and improving on the current portfolio, working on, getting the companies I own at solid prices. Lockheed Martin is one I might add to soon somewhat. They've been falling recently down to around $430 per share. Procter & Gamble is one I'm always wanting to add to, but they're a little expensive right now. Would definitely want it more like 140 or below on that one. Air Products and Chemicals is getting on the cheaper side, but not quite where I want to be buying. Maybe closer to 250 or 240 would be really awesome, I think. But now let's look over into Fidelity and look at the performance for the portfolio. So you can see on the month, the portfolio is down 0.5% compared to the market, which is up 1.5%. Over the past 3 months, we're up 8.7% versus 16% of the market. And then 1 year, 8.3% versus 21% of the market. And then over the past 3 years, the portfolio is up about 13% compared to 11% from the S&P 500. So still beating the S&P 500 over the last 3 years. But as we've been seeing over the past few months, the portfolio has been lagging some, over the past year or so. So that performance in terms of that 3-year performance isn't going to be able to sustain itself unless over the next year or so, I'm able to continue doing better or start doing better than the market in the next few months to a year. So like I've said, this year I want to continue focusing on my dividend CAGR and ensuring that that stays, between 7.5 to 8%. I think I would like to bring it up just a little bit, but not worry about bringing it up too much, but also make sure that I don't bring it down by buying companies that aren't going to raise their dividend much. And there's a few companies that I'm looking to add to soon, like I mentioned, and there's also some I'm unsure of whether I want to keep in the portfolio or not at this point in time. So one of those might be something like Pfizer. So I'm really unsure of, where the company is going to go and whether I want to be a part of that or not. So that's definitely one I want to do some more research into and kind of continually evaluate some more to decide what I want to do with that one. Another one is Amcor. It's a very small portion of my portfolio, less than 1%, I think. So maybe it's not worth worrying about all that much, but that's one that I've owned for a few years, and they haven't grown the dividend as much as I would like to have seen or expected. So definitely going to continue looking into that one and trying to evaluate whether I want to add that one or maybe just leave it where it is or sell it at some point in time. So those are kinds of things that I'm going to be working on this year. I definitely love to hear how your guys' portfolios performed in January and how much you received in dividends. I also want to thank you all for sticking around to the end of the video. I really do appreciate that, and I'll see you all in the next one.